My presentation is going through introduction, research problem and question, research aims and objective, hypothesis, methodology, finding, and recommendation. For introduction, the term digital or cryptocurrency, which refers to digital currency, originated when a man named Satoshi Nakamoto created Bitcoin, a new currency for internet-based communication with the intention of becoming global currency. Despite popularity of the term digital currency, multiplicity of types and uses of these currencies renders the term inaccurate, as the concept and the specification of currency are not available in these common types of electronic media developed for trade, as many of them were created for purpose unrelated to traditional monetary purpose. For stock market, they serve as intermediary between individuals, business, and government in need of finance on the one hand, and the same three groups with the excess saving available for investment on the other. The financial market assists companies in obtaining the capital they require by issuing stocks and bonds, and assists individuals in investing their money by purchasing these securities. But global stock market index and GDP growth slowed as a result of COVID-19 pandemic, energy and food crisis during Russia-Ukraine conflict. Many employment were lost and the economic growth suffered as a result of lower or non-existent saving and investment. As a result, many businesses experienced a reduction in their ability to raise capital through the sale of stocks and bonds, and the profit fell far. Because of this, business performance and economic activity both fell. By comparing the price of digital currencies over the same time period, it finds that they rose sharply as their use spread. This is because the volume of trading in these currencies drastically increased, which improves the efficiency of market for those currencies that are traded in high volume over time, as indicated by numerous studies. To determine the characteristic of investing in digital currency and whether they are a viable alternative to investing in stock market, this study analyzes the price movement of digital currency over a time series extended from January 1st, 2010 to July 15, 2022, and compare it to the movement of the set of value of Arab and international stock exchange indices. Differentiating this study from others is the fact that no researchers have attempted such a comparison, and instead have focused on either explaining the theoretical aspects of digital currency or attempt to establish a framework for dividing and distinguish them. This is especially true in Arab library. For research problem, digital currency have their own demand and supply, as their price fluctuate in response to change in demand and supply for and from them. Thus, it can be said that the price movement of digital currency reflects the extent to which investors rely on them as a tool for investment and profit making. Examining digital currency data from Table 1 reveals that there is a significant difference in average value of digital currency, as the average range from $1 to 733, and percentage change in value of these currency over time series extend from January 1st, 2010 to February 15, 2022, range from 21.48% to 821.45%, indicating a wide range in price volatility. Examining the data of the financial indicator of the various stocks exchange in Table 2 reveals that average value range from 212 to 10,895, with the percentage change from 51% to 165%. Which is significantly less than those of digital currency. Therefore, it is necessary to analyze the relation between price movement of stock indices and those of virtual currency. Okay, for research question, we have two questions. Number one, is there a relationship between movement of digital currency prices and volatility in financial indicator values? Number two, can investment in digital currency offer an alternative to stock markets? Research aims and objectives is to, number one, present the concept of digital currency and their most salient characteristic, compare price fluctuation of digital currency to price fluctuation of financial indicator in MENA region, examine the viability of digital currency as an alternative to stock market investment. Hypothesis. Number one, there is no statistically significant relationship between the movement of digital currency price and the stock index fluctuation. Number two, digital currency cannot be used as a substitute for stock market investment. Research methodology. Population depend on MENA region stock index and the cryptocurrency market. For sampling, 10 largest digital currency in terms of trading volume on July 15, 2022, and the 10 MENA country stock index plus 3 global index, mainly US index. Duration, January 1st, 2010 to July 15, 2022 daily data. A statistical tool used coefficient of variation to measure price fluctuation, simple regression to measure the relationship between the variables. A comparison of magnitude of hazard associated with digital currency market and the stock market based on coefficient variation test. The greater the value of coefficient of variation, the greater the dispersion, which imply an increase in volume of fluctuation and the decline in stability of the data. The researcher discovered that the coefficient of variation for stock market time series data is more stable than for digital currency data. And we can see that in the table. For example, the relation based on linear relationship between cryptocurrency variable and stock market variable will help to reveal the degree to which each variable influences the other. To assess the effect of each, the following two models were suggested. The first model inspects the relationship between stock and the cryptocurrency investment, and here's our model. After testing this model, we find that for every 1 point change in stock market index, cryptocurrency will change by 1.3 points. The second model under consideration inspects the relation. Okay, the relationship between cryptocurrency and the stock investment. And after testing the model, we find that change in cryptocurrency prices affect stock market by 0.38, about 0.4%. Research finding. The result of comparison between time series data of change in the price of 16 financial indicators and the change in value of time series of 10 different digital currency confirms the existence of the relationship between the movement of stock price on financial markets and the movement of price of digital currency, thereby rejecting the first hypothesis of study, which states that there is no statistically significant relationship between the movement of digital currency and the stock index fluctuation. This result in the concept of the acceptance of second hypothesis. Digital currency cannot be used as a substitute for stock market investment. This means that the expectation of investors in both markets are different, which is to be expected given that most investors prefer to invest in stock market because trading with the stock market is more stable and historically safer than this type of. Number 3, this confirms that from investor perspective, the level of demand for each of the two types are driven by different factors. That is, it can be said that the investment characteristics that govern and direct the level of demand for each of them are different, which prevents them from being alternative investment for each other, and instead make them two competing investments. It varies qualities that attract a particular type of investor. And that's all. Thank you for your listening.